As the monthly candles settle, the signals get louder. Welcome to Stocks in Motion by Listing Angles, where we don't follow, we forecast before the herd even blinks. Technology, XLK, is flashing mixed messages. Are we in for a breakout or breakdown? Tesla's rally might be fooling the crowd. Our charts suggest the correction isn't over. And the Japanese yen, all signs point to a potential drop. This episode breaks down key monthly setups with candlestick analysis, Elliott waves, and technicals. Exactly how you stay ahead of the next move. And today we start with the technology sector. XLK. This is the candle map, and what we are seeing here is a very promising closure on Friday. Virtual technology formed a bullish candle here on the daily frame, and it also confirmed a bottom on the weekly frame, and this is significant. The only concern here is this: just on Monday, Tuesday, it formed a very strong bearish cross, 100 over 200 days moving average. How would it impact the perspective? We don't know yet, but this event is strongly bearish. So if we look at the short-term and mid-term frames, they are definitely bullish, and we have a good potential to see higher prices next week. However, if we start looking at the bigger frames and we start with monthly, there are concerns start piling up. So this is the monthly closure. Technically, this could be an inverted hammer. However, it's not fully qualifies for it. I would say it's most likely a thrusting line candle, and it needs a very strong confirmation in order to give us a chance to rally from here. However, this is not very clear at this moment, and if we look at some indicators, for example, like a freshly made MACD bearish cross, which expanded in April despite the green candle, the concerns start to pile up. And if we look at the bigger frame, for example, like a 2 months frame, this is an even bigger concern, because technically this candle is a confirmation of a reversal on a dark cloud cover on the 2 months frame. And if we look at the 4 months frame, this is even a bigger concern. This is a bearish engulfing on the 4 months frame, something that last happened in January 2022. And we see that after that we had 8 months of decline, something that might happen here too. So that's the perspective from the bigger candle. And now if we look at this one, this is our estimate that we did statistical analysis on early in April. Today is May 3rd. And what we would be looking for here is this MACD bearish cross. So far it is on the monthly frame, and this is our potential estimate for based on some statistical numbers. So we would be looking for XLK or technology to drop towards 160 or even 145. That's the perspective technical. Now let's have a look at the Elliott waves, and this is the chart. This is how we left it on April 27 when we last time did update on XLK, and we evaluated and projected this particular target using 3 different Fibonacci ratios. And right now I would say that the stock is ideally sitting in this target area, which is a overlap of all 3. And now there is a very good chance that it ends somewhere here and continues down. The biggest the biggest concern here is that the very first wave downward here was potentially impulsive, 1, 2, 3, 4, 5, and by Elliott Wave theory, it marks only the first wave of a much bigger correction. There are two possible paths that I would be tracking here. First is the blue one, a BC of a bigger wave B, and then we will have another wave C, maybe not that strong as the first one, but if we look for a green path, then wave C would be much stronger here. And if we need to measure it, then we would need to have a bigger chart, something that we outlined way back in February. So far it executes perfectly. Now we have wave A, potentially wave B, and if we want to measure wave C, this would be somewhat very similar to this one. So this is wave A, then wave C would be somewhere here. This would be the perspective target, but we need to see wave B completing first. So this, as I mentioned, it could be either a bigger wave B, or if wave B completes here, then we would have an exact level and we would be able to measure exact targets. So that's the perspective. This is the bigger chart. And let's see how it executes further. The most important part of this discussion is that this wave of the bottom has been corrective. So this wave, this is clearly wave A, 3 waves here. So wave potential wave 5 failed to made a higher high here and left it with 3 waves only. So this is wave A, B, and this is wave C. And this is not an ending, not a leading diagonal, because this wave is corrective, this wave is impulsive. Well, that's the perspective for the technology sector. Now let's move on to the next one and discuss Tesla. So what Tesla candles are telling us? First of all, I am not happy about this big buildup. So potentially it could be leading for a reversal. And if you look at this curling down 100 days moving average, there is a possibility of crossing the 200 days in a couple of weeks. But so far this is somewhat neutral, sitting behind the 200 days moving average, which is a red line. On the weekly frame, after a very strong bearish bullish engulfing here on the weekly, Tesla formed a very indecisive doji, and now we would be looking for confirmation for either path, either bullish or bearish. So far it's kind of neutral. If we look at the bigger frames, this is where concerns again start. This is the monthly frame. We had in March we had a continuation candle, and in April Tesla formed a green candle, which could be a bullish harami, but at the same time it could be a continuation candle. There are technical indicators which support both ways, so this is technically neutral at this moment. If you look at the bigger frames, so far this is a harami, and it had bearish harami in the first 2 months, and it was followed by a hammer. Technically it had a chance to continue lower, but it didn't, and I think this is turning bullish slightly, but again it needs a confirmation. I wouldn't be 100% sure about this. And that's for the candles. But if we look, for example, at this one, this is a 3 month candle, quarterly one, that didn't have closure in April. The next closure will be in June. So far this is under the threat of inside down candle, which is equivalent of a bearish engulfing, and my projection here based on candle size and a few specific technical indicators would be 140. This is something I discussed before. And particular concern would be this one. If Tesla forms a MACD bearish cross here on the quarterly frame, we would be looking for at least 2 or 3 quarters of a bear market. Well, that's the perspective, and I think we need to closely follow this to see how Tesla closes in June. It would be very instrumental and very telling for the future. Now, let's have a look at another concerns. So these are technicals. We discussed this before. This was our original call in January when Tesla was 424. We said it has a very good chance to drop towards 260, 200 area based on some statistical analysis and statistical evaluation. This is exactly what happened. Nobody believed us, but nevertheless, Tesla did what it is expected to do. So it was in the middle of this area, and now it is recovering. But the question is, it might go lower. If we look at the next frame, this is 15-day frame. Tesla is having MACD cross, bearish MACD cross here, and if it escalates to the monthly frame, this would be a very big deal. And we would be looking for a continued decline, somewhat similar to what Tesla did in year 2021, 2023. So I'm talking about this one. Maybe not to that extent, but the decline would be significant. And now let's move on to our Elliott Wave structures. And this is what probably I need to change slightly the chart. So this is the 12-hour chart, and this is our initial call on January 21st, when we said this particular formation, and Tesla had a chance to drop towards 280 or lower. Well, that's what happens. So this is the same channel, and now I'm looking for potential impulse here. So wave 1, 2, 3, and 4. So now the wave 5 by multiple Fibonacci levels in estimates, it would be ideally placed between 210 and 140. Remember 140 from the previous assessment on the candles, by the candles. So this would be aligned with an independent candle estimate. So let's see how Tesla does, and I'd like to say that this is a corrective wave similar to what XLK did. This is a clear corrective wave, and Tesla might need a little higher high here just to complete this wave 4. And after that, we'll be looking for wave 5, which could be either an ending diagonal, which would take it probably for a couple of months easily, or it could be a very sharp and a swift impulse downward. So that's why I'm not sure about that, and I have this very wide target depending on the wave structure. And the final chart for Tesla is this one that our famous one that we called way back in January, saying that Tesla has all chances to drop towards 240 and 140. And later on, we added some details here, potential impulse 1, 2, 3, 4, 5, and the targets remained the same. So now the chart has been unchanged, and I'm looking for wave 4 here and the beginning of wave 5 towards our target. Well, that's the perspective, and now let's move on to the Japanese yen. Let's see what the currency pair is telling us. So I have US dollars to Japanese yen, and what I am seeing here, this is a very strong closure on Friday, on May the 2nd. First of all, the daily frame formed potentially an inverse head and shoulders, here. On the 2-day frame, we have a clear confirmation of a bottom. On the weekly frame, we have a confirmation of a reversal on a piercing line, which was the previous candle formation, and we had an 8-day closure also on on Friday, and we have a bullish engulfing, climbing over the 100 periods moving average. So this is an extremely strong bullish move, and I would be looking for US dollar to strengthen quite a bit against the Japanese currency. And this is the chart that I've been tracking since November 2023. And so practically it is unchanged. So I made a few minor adjustments here, but not the targets and not the wave. So what I'm seeing here is potentially impulsive wave, and this would be the target for wave 503 between 203 and 174. This is for dollar against Japanese yen. So no changes here, and I am looking for a great reversal based on the candles and a very strong momentum. Well, that wraps up our discussion today, and just to consolidate it, markets are shifting, and now it's not the time to guess, it's time to know. If this video added value to your strategy, hit that like, subscribe, and share with your trading communities. Drop your favorite stock or currency pair in the comments. We want to hear from you, and we might chart it together. Don't miss our newly released Microsoft Deep Dive and the Commodities Weekly Digest, available now for members only. Subscription is open through the Join button. At Investing Angles, we decode market signals before they become headlines and always chart the turn before the herd even blinks. See you in the next one.